Hi there, my name is Jamie and welcome to August's episode of Quick Market Talks with Experts. Today, we have got Joey Choi, a top-tier remiser with Philips Securities and an SGX Academy trainer. Our last Quick Market Talk with Joey was on 12th of April, where he shared his views on 3 stocks and an index. Let's talk about how these counters have performed since and Joey's refreshed views on them as well as any new stocks that might interest him. Grab your cup of coffee and listen in on our conversation. Hey Joey, the last
Hi,
time
Jimmy.
you spoke about your bullish view and target levels for Semcom Industries, Genting Singapore, Simski, as well as the C stock futures listed on the SGX. So would you like to do a recap on your views on these counters? Over to you, Joey.
Okay, thanks, Jamie. Sure, let me go ahead and talk about, maybe we talk about Genting Sing first, then we go on to Semcom Industry, then we talk about like Simski and C Limited, all right? So let's go ahead to talk about Genting Singapore. I think we covered Genting Singapore somewhere around like March, I think 21st of March, somewhere around here. So when we covered it then, it was below this resistance level that I talked about. That was like a $1.10 level. So we traded below for a few days, and after that, we managed to break this level and hit it all the way from 110 to near 120, right, which was pretty much our target. And we saw some selling coming back. So I think if you've got in below that 110 level, using warrants as well, you've got in around here, like maybe 108, 109, you're probably sitting on a pretty good gain, more than 8 to 9% gain, near our target about 120, right? But let's assume that if you did not like get out, or taken profit, then you would definitely want to have a plan, because once you enter, we are above this new 110 support, but you could see that we broke this 110 support subsequently about a month later, and it started to trade a little bit lower to where we are right now. So essentially, I think if you got it out, it's some pretty good profits, but we want to have a plan. Let's say if you don't get out normally, we have a plan to, just to set a stop loss to protect our profits, especially if I rode the upside. You want to have a stop loss to protect our profits, maybe just below the 110 support, right? In case it comes down, you can see that after breaking this support, we have indeed traded lower, right? So this is Genting Singapore. I think right now for Genting Singapore, we have found some pretty good support around that 90 cents. So it is just moving sideways for now. You can see the 20 days moving average has started to flatten out. So we are kind of like in this range from 90 to maybe about $1, but in order to see a good reversal happening again, we have to potentially break back above that psychological $1, which can set Genting Singapore on a reversal path back. Right? So that is my take on Genting Singapore. So let's take a look at maybe like Semcom Industry, which did pretty well. And in fact, I think it started to push up back a fair bit. We covered it in somewhere around March, right? Somewhere around March, I think 21st of March. I think somewhere around here. It was just about the $4 level. So $4 level, it was pretty good support. I mentioned about it, and yeah, we did hold above this support, subsequently push up a little bit, and we started to see a bit of consolidation. So you've got in like near 401 or 405 or something like that. That would be a really good move up all the way to like about 546 right now. So like from $4 all the way up to where we are now, it's about 36% upside just by taking a position on the stock directly. But of course, if you use warrants, I think your percentage gains will be much more. All right, and yeah, so this is where we have gone up from like about $4. We consolidated, we broke a resistance about the 440, started push up, and let's zoom into where we are right now. So you can see that over the past like 2 months for Semcom Industry, we have found a little bit of resistance at about the $5.80. Look at this, I've touched about 1, 2, we neared it again, then came down last week. So 580, that is a pretty critical resistance level whereby we definitely want to get above for the uptrend to continue. So right now, it's a little bit of a consolidation, it's a bit of a sideways movement, which is healthy as well because it's good to see some profit taking along the way. We find a new higher support, which is what we're doing right now. We have found a good support around the $5 psychological level. So that is the range from $5 all the way to 580 in the short term. As you can see that the 20 days moving average have started to flatten out. It's kind of like moving sideways, which is okay. As I say, it's just a bit of a short term 2 months consolidation in an uptrend in the longer term. So in the longer term, we look at like the longer term moving averages, which are right over here. The 100 days moving average is pointing up. The blue line is the 200 days moving average, which is pointing up as well. So the longer term uptrend, it looks pretty okay. Just that in the short term, we might see some selling or some profit taking as it moves sideways. But eventually, as I mentioned, if we do break that 580, right, the 580 level, targets can be revised higher, maybe all the way to about 650. That could be the next upside target, right? So yeah, pretty good move for Sembcorp industry since we covered to about now, whereby you can also think about taking some profit near 580 for now. All right. Okay, so we've covered like Genting Singapore and also Sembcorp industry. Let's take a look at SiMSCI and Sea Limited as well, which we talked about previously. I think we covered it in April, early of April. So I think somewhere around here in April, talk about SiMSCI. So for SiMSCI, I mentioned that there could be a potential entry, if we were to break a very key level, right? This level that I mentioned is none other than the 310 to 315 level. You can see that this was the resistance level they were traded below for more than a year. More than a year, we have touched the 310, 315, and we sold off again, right? You can see we kind of sold off again all the way back down. We found support again back at this level. This is the 280. In fact, this last month we traded to about 280, and we saw a rebound, which is happening right now. Right now it's about 307. 307, pretty good bullish move as we rebounded. Right, 307. We might head towards that, same thing, that 315, 310 level, and that's where some profit taking can happen again. So I think for SiMSCI, it'll be better, right? It'll be better that we see a very clear move or clear bullish break of that 315 resistance. If we can do that, I think that would kind of set it up on a more firmer reversal path with the moving averages starting to turn up as well. But for now, you can see we're still below it, all right? And the moving averages are still sideways. So it's not a very clear path. It just shows that sellers are still kept right there at about that, are still stacked around that 315 level, which we are making our way back there right now. All right, so just think of where selling and some profit taking can come back again. Okay, so that's for the SiMSCI. So let's move on to final stock, which we talked about as well. Sea Limited, right? Sea Limited, whereby you can take a position on the Sea futures listed on the SGX as well, right? So I think we were at about this level. Let me see. I think we were somewhere around April, somewhere around here. And I mentioned as well, right, that there were some signs of the trend starting to turn up, but we still want to break this level for any potential entry position to ride the upside. And this level will be the $90, right over here. You can see $90 I talked about, in the previous call as well. It was a very firm resistance level. Look at this, right? Just went there, came down, we touched, we came down, we touched, we came down. And over the past 2 months, we touched and came down. So about 4 to 5 times we neared it, we came back down. So I would say that right now, for Sea Limited, we are still unfortunately capped at that major resistance. Only if we to see that firm break above, right, with the trend starting to show a clearer sign of the uptrend forming, right, then the reversal might happen. So I think right now we're about $63. Let's see where we are right now. So about $63. I think it is just a little bit of a consolidation right now. In terms of the short term, we can draw a support right here, right over here, somewhere around at $55, 55 to maybe around that 60 or maybe about $70, 55 to 70. I think that is the range right now as we are seeing the short term 20 days moving average. You can see this green line starting to flatten out. It just shows a little bit of a sideways movement right here from 55 to 70, right? And then of course, if we do break 70, we might make our way back up to that $90 again. All right, so that is Sea Limited. So maybe Jamie, back to you. I mean, now that I've covered the 4 stocks, how did the warrants do? I mean, based on maybe like Sembcorp industry, let's assume if someone has taken a position from near $4 all the way to where we are right now, what would the percentage gains really look like?
So Joey, thanks for all the insight. So I guess before we talk about how the warrants would perform, I would like to just quickly summarize for our viewers, the views you have on the 4 stocks that we talked about. So Sembcorp Industries, you would say, obviously this is one stock that, you've just been spot on since March 22nd. But for now, you remain quite bullish, depending on whether it would break above 580, right? And if that's the case, you will look out for 650. So I assume you're probably still long on the shares?
Yeah. For Sembcorp Industry, as I mentioned, I think right now we have formed some pretty good support at $5. So anything above $5, I think it looks pretty bullish. The uptrend is still intact. We are just moving sideways from 5 to 580, and eventually 550 with the give way. I think upside targets can be revised to 650 as I mentioned.
Great. And then for Genting Singapore, you would have cut loss at 110, right? As it tried to go to 120 and failed, and then went below 110 to be around 94 cents today as of I think 11:45 a.m. on the 31st of July. Now, in which case, you will have cut loss. But if we had investors who were still long in this name via warrant, would you then suggest that they should probably cut their losses?
Yes, I would suggest for Genting Singapore, where it's more like a short-term play. When I introduced it, if we do break the 110, as I mentioned, 120 was a near-term target. So it is always good to lock in some profits or maybe take partial profits as it hits to one of those key resistance level, which is our target. So from 110, if you enter and you get in, and you ride it all the way to about 118 or near 120, that will be about more than 5 to 8% in about a week or two, which I think is pretty good. So that's where one can take profit as well. But if not, then you can also take steps to protect your profits. That means you can raise your stop loss upwards. That means, let's say it goes to maybe, one of the techniques we use, if it goes to maybe you bought at 108 and it goes to 118, right? So 108 to 118 is 10 cents. So you can actually take steps to raise your stop loss, from 118, you can put your stop loss at maybe about 114 or 115. So it comes back down, it hit your stop loss, you still make money, right? So that could be one of the way. Or you could also put your stop loss just a few bits below that support, which is at 110. So in case it breaks back down below 110, you could have a stop loss plan to also get out if that support were to break down.
Okay. And so those who are currently holding on to Genting Singapore call warrants would potentially like to consider a cut loss. But otherwise, you also mentioned that a break above $1 would be something to look out for in Genting Singapore shares.
Yes, correct.
Okay.
Right now, I think $1 would be that level, that psychological level that we want to watch. I think we are just consolidating below it. We're nearing it, but sellers are still coming back. But if that kind of gives way again, I think the reversal might happen in the short term again.
Okay. And moving on to SimSkis, you said basically you wouldn't have gotten into position after our last call because basically it didn't hit your entry level. It failed to break above the 315 mark, correct?
Correct.
Okay, so
315, those really critical resistance that we really want to get above, before any good entry to ride the upside can happen.
Right. So we continue to look out for that. And thereafter, you were saying we could potentially look forward to maybe a 330 upside target.
Yeah, I mean, if 315 were to give way, we have been below it for more than a year. Sellers came back and pushed it down. If that gives way, I think potential target may be all the way to about 330, maybe 330 to 350. That could be the upside where we might close the gap.
Okay. And finally, with the C stock futures that's listed on the SGX, so you do think that it's going to be range bound and to look out for a break out above the $70 level. Thereafter, we could potentially look toward a $90 resistance. So those who have yet to get into position in SimSki and C, like Joey, could potentially consider that. But Joey, I guess you certainly be looking forward to those target levels to initiate a long position, perhaps via call warrants, and look to make a leverage return on that. To have a look at the historical performance of the Sembcorp Industry call warrant that we mentioned in our previous video with you, if you had gone long via this call warrant instead of the shares, let's have a look at what we would have done. Historical performance can be found under the warrant tools section of warrants.com.sg. Okay, in this case, the warrant that we had discussed previously is this warrant VJAW. To look at other Sembcorp Industries warrant, you can simply type and you would drop down to see a total of 4 Sembcorp Industry warrants, and you can review the historical performance for them. But for the purpose of this discussion, because we talked about VJAW, let's have a look at the historical performance of this warrant. A chart of the Sembcorp Industry shares in blue here versus the warrant in orange can be seen in this chart. And like we said, basically on the 13th of April, a day after we went live with Joey the last time around, the stock was trading around 426. Again, the warrant price was about 5 cents. But if we went further back to, I think, Joey, was it 22nd of March? The stock was actually at 413 and the warrant was cheaper at 4.7 cents because the stock was cheaper. And you could have potentially gone long either here at 4.7 cents or 5 cents. Okay, let's have a look at what it was in March. 22nd of March. When the stock was about 413, when we last did the quick market talk video with you, Joey, on the 22nd of March, you would have been able to get into the warrant at 4.7 cents. And as of now, on the 31st of July, 11:50 a.m., the warrant is up 125% versus the 31.7% return in Sembcorp Industry shares. So if you had gotten in a bit later, maybe say on the 13th of April, okay, when the stock was a little bit higher and you were sure that it had broken above the 420 resistance and held safely above $4, you could have gotten in at a higher price, and that would still have translated to a really nice profit of 112% versus the 28% return if you had gone long in the shares instead. So this is an example of how warrants can multiply your returns if you get your view right. Now let's have a look at Genting Singapore, where Joey also thought that that was a long position that he would have initiated. Okay, there are two warrants here, and one of the warrants we mentioned was actually KCIW, and this warrant VWFW was listed later. But let's have a look at KCIW first. Okay, so the first time we talked about Genting Singapore shares was obviously also on the 22nd of March, right? And before that, this warrant had not existed because the first day of the listing was actually on the 24th of March. But at that point, it was still below 110. And if we had gotten in maybe just slightly above 110, because it was a confirmation of it, breaking above
111.
resistance, 111 on 31st of March. Okay, so unfortunately, if Joey, you did not cut loss when it went down below 110 and gave way below, what would happen now is that you'd be sitting on a 93.3% loss in this warrant versus the 15% loss in the stock. Okay, and this is again a classic example of how a warrant, whilst if you had gotten your view right, it would have multiplied your returns. But in this case, if you had gotten your view wrong, it will also multiply your losses. So do understand the risk of warrants before trading them. And I think what you mentioned about cutting losses is very important via a warrant. And in this case, if you had say cut your losses when the stock went below 110 again, and this was on 4th of May, 3rd of May. There you go. If the stock had tumbled back below the 110 level, and you decided to cut your losses at a 3.6% loss via the stock, this would have translated into a 33.3% loss. Now, still magnified, but certainly less than the 93% loss that we were just looking at. So now that we have gone through how the warrants would have performed if you had gone long the shares via them, obviously one would have made you more than 100% return. The other one would have lost you anything between 33% to 93%. Is there any other shares that you also think could be quite interesting?
Yeah, sure. Thanks, Jamie, for asking. There is one stock that came into my watch list over the past few weeks. Maybe I can share with you my screen again, and we talk about this stock called Yangzijiang YZJ Shipbuilding SGD. All right, so this is one of the stocks whereby this came to our watch list again over the past few weeks. Let me just go to explain to you why we like it. So firstly, this stock has been in a pretty decent uptrend, since last year. We have seen the longer term moving averages like the 100 days and even 200 days pointing up, very gradual, all right? And of course, we did see a bit of profit taking along the way as well in the short term. So let me go to draw another support right here. So that was the range whereby November last year to recently, we have been, while in the longer term uptrend, we were consolidating in this range right over here, right? From about that 115 to about that 145 level. So 115 to 145. So about a 30 cents range. And that's what we've been doing. But over the past few weeks, we started to see the signs of the uptrend accelerating or starting to form up even clearer, all right? And that was the reason we kind of like broke this 140 to 145 level. You can see, as I mentioned, we were trading below it since November last year. And yeah, we broke above this 140, 145, you can see right over here. And right now, we are consolidating at a higher level, at about 1.5 points. So I would say right now, the support level could be at around that 140 to maybe even 145. I think 145 seems like a much higher support, whereby the past 2-3 weeks we have been holding above as it continues to consolidate sideways. So you can see that the 20 days moving average line, this green line was pointing up as we made our move up. It was sloping up, and now it has started to flatten out. It just shows that the sideways in the short term, the sideways trend is more is happening right now in the short term, which is okay, as I say, because we want to consolidate from maybe 145 to about I would say maybe about 155. We can tighten up the range, 145 to 155, about a 10 cents range. You can see right here, that is a range right now. But if we do break like the 155 again, I think that is where the uptrend can continue even further, maybe all the way up to 170, right? So yeah, this is one of the stocks that came to our watch list. Anything that it holds anything above this 145 level, I think the uptrend still remains intact. It's one of those stocks whereby one can position yourself to potentially ride the uptrend even further, if the 155 to 160 were to give way eventually.
So Joey, so I guess then if you say as long as it holds about 145, you think it's interesting. The question is, would you get in long on the stock now already? Or are you looking for confirmation above 155 before you get long and maybe wait for 170 to come around?
Okay, good question, Jamie. So basically, I think one can take a position because we have found a support around the 145. So anything above 145, that means if it does dip to, now it's 151. So if it does dip a little bit to, 147, 148, nobody knows exactly how low it can dip. But if it does dip to this range right over here, so let me just draw it for you. I think that's what we call a support zone because it was a resistance level and we have broken up, we're still holding above it. So anything from 145 to maybe 148, 149, plus the cheaper it gets, the better it is. But of course, nobody knows how low it can go for us to actually time our entry. But in this zone, 145, 146, 147, 148 to maybe 150, that can be a good entry to ride it all the way up to that 155 first. And of course, if the 155 break, that is where more upside can be. You can ride the upside even further as well.
Okay, so Joey, if I may propose, looking at a Yang Zhejiang call warrant to get long into the shares instead.
Sure.
How
will the warrants perform? I wanted to ask you as well, sorry. How will the warrants perform?
If you're keen to find out how the Yang Zhejiang call warrant will perform, given your view, there are a few ways to look at it. One is via the warrant selector to see how the warrant will perform in the short term. Another one is a live matrix tool, which will tell you where the warrant price is currently. Okay, and so in this case, we can look for a Yang Zhejiang warrant, of which the trending call warrant is VPBW. If we were to look at the live matrix, you'll see that currently, as of 31st of July, the end of the morning session at 12 p.m., the warrant is costing 4.5 cents because the stock is $1.53. However, if you were looking for a cheaper entry level, you mentioned around 148 to 149, then the warrant price would be 3.9 cents on offer to 4 cents on the offer. Okay, now looking at how this warrant will perform in the short term, we can use the warrant selector tool, enter the underlying of Yang Zhejiang. We're bullish, so we're choosing the call. Okay, and if we're looking for a break above 155, which is 1.3% return from where we are now, okay, if you look at the warrant performance, if you were to do so today, this warrant VPBW will go up 12.5%. If it were to take 1 week to try to touch 155 and attempt to break above it, the warrant will generate a 7.5% return in a week's time. If it took 2 weeks, it would go up only 2.5%. Now you see the gains getting lower and lower, Joey, and that's because the time decay of the warrant has set in. Time decay is the holding cost of the warrant, whereby if you were to increase the time, you notice that the warrant gains will erode. In this case, if you held the warrant for 3 weeks, it will in fact generate a loss of 2.5% if the stock went up just 1.3%. However, if it manages to break above 155 to go to 170 in 3 weeks, now that's a very different story with this warrant. It straight away goes from a loss of 2.5% to be up 52.5% instead, which is close to 5 times of this 11.11% gain on the stock. Okay, if it took lesser time, say 2 weeks or a week, obviously the warrant then will go up more because there's less time decay setting in. So that's something, to consider and think about. And note that the maximum you can hold on to this warrant for, based on the 170 target level, you can keep increasing the number of weeks here. Yeah, the maximum you can hold it for is 8 weeks because thereafter the warrant will expire. Whereas the alternative of RLWW, it will generate no return in 9 weeks. Okay, so if you want to consider this warrant instead, the maximum you hold it for is then 7 weeks for this warrant RLWW. Why? Because at least it's still producing higher gains compared to the stock. Okay, but by the 8th week, it's actually gaining less than the stock. Again, because of time decay. So I hope that was clear for you. I'm afraid that's all the time we have for today. Thanks for your time. Thanks for taking time to always share your insights, and take us through profit levels, resistance levels, but also cut loss levels. So, as with any product, Joey, it's important that you understand the financial risks associated with them. And, again, as you continue to explore the markets and have new ideas, I hope warrants will be one of the tools that you could consider. Those who are keen to continue to follow on these quick market talk video series with Joey and receive notifications on them, you may wish to subscribe to our social media channels of Telegram and Facebook, as well as YouTube. Joey, thanks again for your time, and I look forward to catching up with you to discuss how Yang Zhejiang would perform.
Okay.
Thanks and best of luck in the markets.
Okay, bye-bye.
Bye.
Bye.